So you're ready to trek down the forever winding, at times treacherous, not so silky, yet for many lucrative path to financial freedom by investing into the stock market. Now, if you're anything like me or the massive investors who have come before me, you very well may be questioning just how many stocks you should actually hold within your investment portfolio. That's exactly the question that we're going to nail down today, because at least from what I've seen out there are just too many investors who are actually destroying their chances of striking rich, all because of the size of their portfolio. With that, are you ready? So for one thing, I wish this video and many others like it were actually a part of our educational system. But instead, we're all busy learning about things that I personally have never used, at least as of yet, in my real life. Meanwhile, every day I'm faced with financial decisions and really have been navigating many of them on my own over the years. Something that I don't want you all doing. So learn from me, save yourself the agony and pain of regret, but moreover, relish in the riches in due time from some of the wisdom I'm about to share with you. So back to the basics we go in answering that question, how many stocks should we own in our portfolios? Because if you own way too many stocks, say 60, 70, or over 100 in some cases, and you actually have one home run hit in the mix that's a 10-bagger, it actually won't have a huge overall effect on growing your money, thus leaving you with nickels and dimes as opposed to, say, stacking bills on bills. However, if you have too few stocks, say 2 or 3, or in some crazy cases, just one stock you win all in on, you'd be taking on an insane amount of risk as if you were just going to Vegas to gamble, where you could potentially win big, but chances are you may lose all your hard-earned capital, which obviously you want to totally avoid. Now, as Buffett's golden rule goes, don't lose money, followed by his second rule to follow rule number 1. So this is a great question now for all of us, and it's just time we get to the bottom of knowing how many stocks we should all hold within our portfolios, as it remains a fiercely debated topic within the finance community. Now, quick story. I personally began my investing career going all in on just one investment, which totally defies everything that I just shared.
Alrighty then.
But that investment was actually Vanguard's total stock market index fund, Admiral Shares, that's ticker symbol VTSAX, which is not a stock, but rather an index, meaning it wasn't really me plunging into the depths of risk, as we can click into the fund's overview on Vanguard to find that it will give an investor a low-cost way to gain broad exposure to the entire US stock market, meaning as I scroll down here, I was getting invested into thousands of companies spread across sectors like technology, that weighs in around 33.6% of the fund's weight, consumer discretionary at 13.6%, industrials at 12.6%, as well as healthcare and financials at 11.5% and 11.2% respectively. With some of the top industry leaders as the fund's largest holdings like Apple and Microsoft, nowadays Nvidia, which wasn't in the mix when I started investing into the fund, but now followed by Amazon, Meta, Google, Berkshire Hathaway, Broadcom, and Eli Lilly. All companies you're probably familiar with. Now, I did this because I didn't really have a clue what I was doing, but I knew enough then that I had to get into the market if I wanted to actually strike rich. So after taking a look into the fund's performance here, whereas a $10,000 investment into the fund would have more than doubled my money, coming all the way up to over $32,500, I was sold. Not to mention the expense ratio came in at 0.04%, meaning just $4 per $10,000 invested, while being paid a nice sliver of a quarterly dividend coming in at 1.24%. So I put a few $1,000s in to start, followed that up shortly thereafter with another few $1,000s, and then all the way up to $20,000, which is all that I had at that time to build an investment foundation. Now that was a little over a decade and something change ago, and here's my truth. Today, I wish I did it differently. Not to say do away with the entire investment foundation idea, which I believe is how every investor should actually start, but I personally wish that I selected individual stocks, say right after I put an initial $10,000 investment into VTSAX, and then dollar cost average my way into a larger foundation on a monthly basis. Which brings us right back to our question of how many stocks should we actually have within our investment portfolio? And as I thought about this question after sitting on VTSAX, I went ahead to begin to add stocks to my portfolio, not really knowing full well what I was doing, and I loaded up on shares worth of Apple, since I was then and remain just a Apple fanatic using their products, which at that time was perfect, enough so for me to invest into the business, just knowing that I used the products. And now, sure enough, Apple over the years became my largest individual stock position, did insanely well, and my ROI has just been nuts. But then I added Johnson & Johnson to the mix, which I knew to be at that time the king of healthcare investments, as it continues to dominate dominate the industry, whether that's in pharmaceuticals or medical devices. And at that time when I first invested into J&J, it still had consumer care products under its belt, all while shelling out a nice dividend. And upon my willy-nilly, no-process investing journey, I then did the one thing that we all do during times of uncertainty. I Googled, and after all 15 and a half seconds of research, I discovered that I needed more holdings in my portfolio as I read that a well-diversified portfolio consists of more than 20 to 30 stocks. And slowly but surely, I was indeed building a portfolio. Ladies and gentlemen, investors, I was doing this whole investing deal. And then 2020 hit, and the storm was just nuts out there. I mean, stocks were plummeting to oblivion. Opportunity after opportunity was coming about, and I was loading up on just about everything that I could because literally everything was trading at a discount. So my portfolio went from roughly 10 positions to well over 40, 50, maybe even 60 holdings. Diversification, after all, was the key. Then once again, the game changed for me when I heard Bill Ackman share that at any given time, there are really only a handful of high-quality stock opportunities out there to invest into. And if you're busy buying everything, you're gonna miss out on some of the real golden opportunities to perhaps double, triple, or quadruple your money. But on the other hand, good old Warren Buffett was preaching that diversification is protection against ignorance. So what's the deal here? And who do we believe or listen to? And what do we even do, most importantly? Which leads me right back to square one with all of you yet again. How many stocks should we have within our portfolio? What is that ideal number? And the real answer to this question actually just comes right down to you and what you feel most comfortable with. Now, just from personal experience, having held just a single fund to loading up on dozens of stocks and then trimming the portfolio back down to now 17 holdings and eventually wanting to get that down to 10 to 12 holdings, I think less is more. But let me explain. I'm not saying to own 2 to 3 stocks, but I am sharing that owning 7 to 10 stocks on top of an investment foundation has been insanely lucrative for me the more I trim my portfolio down to fit this mold. And I mean, just think about it. If you only have, say, $1,000 to invest, like the vast majority of you out there, or perhaps you have $5,000 or $10,000, and you spread yourself into an allotment of 30 positions, you're talking about peanuts worth of capital into each holding. Literally, $1,000 into 30 holdings is just about $33 versus remaining focused and selecting 5 to 7 holdings inclusive of your investment foundation. And you could just see by running the numbers the real power of concentration. And on top of that allocation argument comes the human aspect of just simply not being able to keep tabs on the dozens and dozens of companies that you may be investing into. Heck, I personally have enough trouble keeping track of my day-to-day schedule, and if you're professionals out there who you're looking to can't even keep up with the hundreds of companies that they're supposed to be, well, how can you? Now, some people may look at my thought process here and say, Ari,
What an amateur. This deal is amateur hour.
But you may be right, I may be wrong, you might be wrong, I may be right. Whatever it may be, it really is anyone's game at the end of the day, as long as you're investing, making money, and most importantly, not losing it. Your strategy has to be comfortable enough for you to actually stick with it through the ups and the downs of the market, because the market's going to tank, it's going to fly, and you're just going to experience every emotion in between. So as long as you can sit tight, and therefore I would honestly make the case right now that it's not exactly about how many holdings you have within your portfolio, but rather the quality of each holding that you have in your portfolio and whether they hit the essential pieces of investment criteria for you, which for me come down to having a reputable brand name, a strong leadership team, and most importantly, little to no debt. But then on the dividend end, it has to have a growing dividend, meaning for time's sake, it's going to continue to grow. And that might mean a lower yield to really capture more of the growth that I'm looking for and a healthy payout ratio. And if you're interested in understanding the types of stocks that I'm actually talking about, I encourage you to join me here on the channel, because every single week, if you're a subscriber, you're getting every single brand new stock idea for you delivered to you so you can invest into them knowing they're reliable dividend stocks. But now here's the ultimate secret. Are you ready? If you just own an ETF that tracks the broader stock market, you will ultimately outperform the vast majority of professional stock pickers out there and save yourself all the trialing and erroring, losses and emotional reactions of investing if you have, say, an S&P ETF that you invest into on a weekly or monthly basis until the end of your journey, which, yes, you will likely hit millionaire status if you just keep it that simple. Now, investors, the comment box is down below. Feel free to put me in my place with your opinion opinion. Let me know how many stocks you actually have in your portfolio right now, what you think the magic number is to own in terms of a holdings count, and if you've had any major epiphany moments as an investor that has made you shift gears in a different direction. Moreover, be sure you're subscribed to the channel and check out more insights right here.